Good evening, everybody. Richard here from Vema Trader on the 1st of March for our open Q&A session. We've got a lot of fun things to show you tonight. The first one is that we have officially integrated BitGet into Vema Trader, which is so exciting. Awesome. We've been trying to get them done for ages. I've been working with the team there. We've got local contacts in Australia and direct access to developers. They've been super helpful. I'm really happy to be working with them. We're going to be doing a trading competition with BitGet as well, sponsored by BitGet. So in the next week or two, you'll log into Vema Trader and you'll see a banner up the top saying, hey, come and join the BitGet trading competition. That one can be paper traded or live traded. And there'll be some mad prizes up for grabs for that one. I've got some other things to show us for tonight, but the point of these is really the big open Q&A session. And so g'day, Mr. Sebastian Cotton. I believe you had a question for us to go through for us this evening.
What an intro. Cheers, Richard. Yeah, so this is just like a basic Q&A, like anything about Vema, right?
Anything at all you want about Vema? Yep.
Yeah, right. So I think it's the first one I've been on with you actually, Richard. So
I don't believe you and I have actually seen each other since Cairns. Or did we? No, you were in Sydney together for a bit, weren't we?
yeah, the last two Sydney events I was at, but I wasn't at the last two previous events.
Yeah,
well,
okay.
Last Melbourne one anyway.
Either way, mate, it is great to see you again.
Cheers, you too. Yeah, so I've just was setting up a bounce last night, and I just I have some idea on the when you add a condition.
Yep.
So you've got your expiry date, operate candle close, distance to confirm, distance to invalidate, and alert only. I just wanted you to touch a wee bit more on your distance to confirm, your distance to invalidate, and what's the difference between those two and the distance to activate.
Okay, sure thing.
That makes sense.
That makes perfect sense. And let's go through that one in 3, 2, 1. And the classic zoom light. Can you see my screen? You can see my Vema at the moment. Yep, sweet. All right, so I'm just going to jump over into Vema, and I have got BitGet selected because they are amazing, and I like BitGet a lot now. Let's get rid of all this stuff, and let's go and pick on Bitcoin. And I'll get rid of all this Bitcoin stuff that I have here as well. Rightio, any preference for, you know what? No, we're going to talk about bounce strategy, and we're going to ignore chart interval for right now. So I'm going to put a trigger right here and pretend that this is an absolutely wonderful spot. I don't know, maybe let's put a fibs down and go, hey, there's going to be a great bounce opportunity right there. Come on. What? Wrong tool, Richard. You need the fibs tool. Getting the take profit stop loss one. There we go. Look at that. So from the, this is some pretty crappy TA, but let's go with it for the sake of example. We have got ourselves the low recently on the 1 hour to the high, and down here where prior resistance was at 57,400, we've now got a 50% retracement. And so we're looking at this going, hey, we want to do a bounce strategy when price comes back down to trigger one. What are the different ways, the different trades that we could do off that if we wanted to use a bounce strategy? So I'll go to setups. It's already got trigger one selected. I'll go long and I'll choose the bounce strategy. All right, so by default, what this means is that price has to come down and touch the trigger. So super simple, just has to come touch the trigger. As soon as price touches the trigger, Vema's going to go, hey, I want to take that trade. I'll move my stop loss a little more interesting though, so our risk to reward gets a bit better, and we'll move our take profit way further away because it's more interesting. Cool. So, well, hang on. If this is an absolutely spot on area of where price needs to come to, there's probably going to be a bunch of people looking at this 50 fibs level at this support level and thinking, you know what? I want to front run that and make sure that I get in. So someone could put a big order right here, big buy order, buy all up all the sells as it comes down, and then your entry never gets touched because it never actually touches the trigger. So for that, to make sure that you don't get front run and your order gets missed, you can use the distance to activate. So I'm going to put in there of, let's go 0. I'm going to go 1% just to really make it really big and visible. So you'll see the blue line has moved off the trigger now. So this now says price has to come down. And if it gets close enough, if it comes within 1% range of the trigger, then that's going to say, hey, we've come close enough to the trigger for the bounce. Let's go ahead and take the trade. Now, you could say, well, what I could do for that as well, Richard, is just not use a distance to activate and move the trigger higher. Why don't I just do that? And the reason for that is because you can have some more interesting things happen with other conditions brought in with the distance to activate. So I'm going to put that back to 1%. And then I will bring in a condition here of a distance to confirm. So now that this has currently got a 0, so let's set this to 2%. What's that blue line, the blue horizontal line, the estimated entry? It's now going to go up a bunch more. So what this is saying is price has to, I'm going to zoom in on it. Whoop. Price has to first come down to be somewhere in this range of 1% to activate the trigger. But before it'll take the trade, we need to see price confirm bullish action, that there's a good long and a good bounce off this, by saying price has to come down within the 1% buffer range and then has to leave at least 1% away from the distance to confirm before we take the trade. Seb, does that make sense as to what the distance to confirm is doing and how it's working with the activate?
That makes sense. So if we just did 0% on distance to activate and did distance to confirm, that'd still work?
Yeah, absolutely. That's going to work the same way. Now it's saying, well, you know what? Price has to, let me get rid of all these things. Get rid of that, get rid of that. Price has to come down to and touch the trigger. But if it comes underneath, it's not going to take the trade. It's not going to take the trade until price has then gone back up and gone the full distance to confirm amount away from the trigger.
Yeah.
That's incredible, man.
Oh yeah, it gets more fun than that. It gets more fun than that. What if the last part of Sebastian's question was what's this distance to invalidate part here? So first off, if you've just got a distance to activate and a distance to invalidate, this does nothing. It's right now in this setup, it won't do anything because price is going to come down and it's going to touch the trigger and it's going to get entered. And it doesn't matter what happens. The invalidation actually doesn't do anything. So it's something that we know we need to change, and we'll get onto it pretty soon, where if you add a distance to invalidate, it will also add on a distance to confirm or a candle close. So what this does now is I'll put this back the way it was with our original setup. Just notice as I change these values, the blue visualizer of what price needs to do is going to change as well. So if I set that distance to activate to 0, price needs to come down and touch the trigger. But if I set that distance to activate of, let's say, 1%, now it says, well, price has to come down within 1% away of the trigger and then go back up to confirm. So that blue line is really, really descriptive of what needs to happen with the trade, with price action before it takes you into the trade. Anyway, so the distance to, we're back where we were before. Let's talk about the distance to invalidate. This example that I gave here of price coming down and then falling through, well, what if price was to, like, at some point you would hate this to happen. Price comes down to the trigger, falls down, and then maybe 3 days later it comes back up and takes you into a trade. You're like, well, hang on. I was looking for a bounce off a support level, but that support level is no longer valid because price just fell straight through. So the distance to invalidate says how far away does price have to go on the other side of the trigger without bouncing up and going long before Vema says, hey, this has invalidated the support level. And so with a 2% distance to invalidate, that would mean price has to come down to the activation zone, has not entered a trade. It can hang around down here. And then if it falls through and goes 2% past the trigger, then Vema's going to say, hang on, this is not good anymore. Let's invalidate that entire position. And so if price then was to come back up, well, it didn't bounce off the trigger, so you would not be sucked into a trade. Making sense? Awesome. So yeah, that's what the distance to activate So short version, distance to activate has to come, how close does price have to come to your trigger? A distance to confirm, how far price has to come and then move away from to confirm the bullish action for you. And the distance to invalidate, what if price doesn't bounce and it falls straight through? Oh, well, then we'll invalidate the trade for you. And so just any questions off that one, Sebastian or anyone?
So the distance to invalidate will only kick in if it had entered the trade, eh?
No,
So
the
obviously
distance to
if it
invalidate
hadn't bounced off the trigger, it wouldn't have entered anyway.
The distance to invalidate will only work if the trade has not entered yet. If you had this setup, a distance to activate of 0.5 and a distance to confirm of 1, and price was to come down, activate, and then confirm, I mean, look where my stop loss is. It's 4.5% away, but my distance to invalidate was 2%. So in this case, I'd now be in a trade right here. Sorry, a little bit further back right there. If price was to then fall down here and go 2% past the trigger, well, the invalidation is the invalidation of getting into the trade. It's not your stop loss. So in this case here, you'd still be in the trade. The distance to invalidate would have stopped looking for price action when the trade was entered.
Yeah, perfect.
Your stop loss is what invalidates the open position. And that's a really, really good question. That's a big distinction of it. Yeah. Whoops, I didn't mean to cancel that one. Edit that, come back to life. Awesome. So there is one more thing that I want to talk about off all of this, which is get rid of all these, get rid of all these, get rid of all these. I just want like a tool in this that says get rid of this one particular type of drawing. But it doesn't exist. Anyway, what if you had this as your setup? I've got a distance to activate of 1%. So now price has to come within 1% of the trigger. But what if you had a operate on candle close? Now what this says is price has to come down within if the candle closes in that 1% range from the trigger to the activation zone, then Vema is going to go, oh, it closed in the range, I'll take the trade. If price was to come down inside the range and then come back up here, and that's where the candle closes, then Vema is going to go, well, you know what? It activated. It came down and activated, and now the candle has closed above the trigger. You know, price in that prior candle, price actually did come down to the activation zone. So I'm going to open the trade, but it opens the trade at the closing candle price. So this way it lets you double check, hey, did actually price not just, hey, it touched the support level and get me in straight away, but I want to see that a candle has closed within some range of the trigger, just giving you a nicer level of confirmation as well.
But if the candle closes below the trigger, it won't enter?
But if candle comes down here and closes below the trigger, well, so now, hey, it activated, yes, and it did actually touch the trigger, but there's another check in here. Well, we're expecting a bounce condition here, so we're expecting price to come and hit it and bounce off it. So Vema does another check before it does the actual entry. Is price on the correct side of the trigger? No, it's closed past the trigger. Oh, okay, well, then we didn't bounce, so we won't take the trade. But that currently doesn't have an invalidate condition. So if price was to then go ahead and close the next candle back up here above the trigger, then Vema's going to take the trade. The only way that invalidate would happen here is if price, let's put this to 1%, price would have to come down. Where does it close? It closed up here, but it got invalidated. The wick wicked its way down there. So Vema would say, hey, the last candle actually did go down to the invalidation, and so it would have invalidated itself. So the edge casey bits for it. We're getting into the express nitty gritty of exactly how the conditions combine together, which is interesting to know. But yeah, your original question, activate, confirm, and invalidate. They all operate the same way. It's just candle close says, hey, go ahead and check out the prior candle that actually closed and look at the full range of it. Did it activate? Did it confirm? Yes. And did it go ahead and invalidate? Oh, it invalidated. I won't take the trade. Cool.
Yeah, that makes heaps more sense. Cheers, Richard.
No worries, man. No worries at all. Now, so Christy Francois asks, how do I know which values to use for these three inputs here? And that's a really good question. The answer to that is really just a bit of experience and what actually works for you. So I'll show you what I tend to use for these, which is a distance to activate of 0.5 and a distance to confirm of 1 and a distance to invalidate of 1.5. That's not me saying this is what you should use. This is what I found works pretty good for me. These numbers, they will dramatically change depending on which asset you're trading. If you put these conditions on Bitcoin, I think it works pretty well. That's cool. But if you were to put this onto, say, Tron, or there was another ridiculous one I heard of yesterday called Sats, which has 11 zeros in front of it. Or what is 1% on Tron? It's a much smaller move. So if I was to cancel this, and let's switch over to look at, say, Cardano. Yep, proceed, cancel those. No, Cardano is not that bad. What's something that's got a bunch of zeros on it? TRX. I just pick on Tron, Richard. If I was to, oh, look, here's a trade. Let's go and add a support level right here. And then go and add a setup, zoom in on this one, and we'll go direction, long, strategy, bounce, and I'll add in my confirm and my invalidate. Preview for what I'm about to talk about next. Look how much of a pain it is to add all of these conditions on. Oh, I just want it to be fully automated, please. Wink. Look at what it does now for this trade. It is now 0.5% price move is actually not as good for Tron. So maybe for Tron, I'd want to go a distance to activate of maybe 0.2 and a confirm of 0.5, probably even a little bit less than that. And where's my 1% invalidation now? It's all the way down here. Am I okay with that? No, I'd want to pull it closer. So I'd put that as maybe 0.5%. So Christy, how do you know which values to use for these? There's no exact answer to that one. It is a bit of, well, put some values in and see what it actually looks like. How does it affect the blue line? I think I was doing what did I have it? I used the bounce in here the other day, didn't I? Bounce, 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 bounce. Here we go. So here's a CRO trade that I'm in, and let's make me look good. It's currently up 8.49%. Yeah. If we go and look at this one and we zoom in where the entry was, how do we find the entry? We find the created date and we zoom in. And then there is the blue arrow that says the trade was entered at this time. So double click on that one. What was this? This was a bounce strategy. It was a long and it had a distance to activate of price must touch the trigger, must hit the uptrend. In this case, what was the uptrend? It was this beautiful trigger here that had been touched, that had been touched, that had been touched. It had been touched several times. So in this case, I decided, all right, I'll put the activate as 0%. It must touch the trigger, but the confirmation is 1% above it. And if we look here, what did that do? Without a distance to confirm, the entry would have been on this red candle here because this is when it touched the trigger right there. But then it went down and my invalidation was 2%. So it had to go 2% below the trigger. It didn't go 2%. It turned around and came back up again. And this is where it actually went 1% above the trigger. And so that got me into the trade. So nearly got invalidated. Didn't actually bounce off the trigger, but hey, cool, I got the bullish action later on that said, hey, let's take the trade. More of a by fluke than anything. It then went back down and came back up, and now it's continuing to go up. So originally my plan was, crap, I hope this trend line holds, which it didn't. But in some crazy way, it has decided to keep on going up and up and up and up and up and up, and yay. Christy, I hope that answers your question for you.
Hey, Richard.
Sorry, 1 second. I believe that was Sean. Chris just put something into the chat. I want to follow up on that. This is my first Vema Zoom. Awesome. Happy to thank you for joining us. I only joined this week. Kick ass. Am I right that Vema is only leverage trades and you can't spot here at the moment? So in Vema, you currently cannot spot. It is futures trading only. So it's futures trading, and futures does involve leverage, but there is a huge misconception out there that leverage comes with different fees and different affects your P&L and stuff. And I could rant on that for freaking ages. Those share cuts from the exchange, damn, they piss me off. Anyway, I've got another video where I rant about that. I'll send it to you if you want. Yeah, so there's no problem with leverage. It is perfectly fine, perfectly safe. Vema, when it puts the leverage, actually makes sure that when we enter a trade, that there is a buffer of, I think it's 2 to 3% away from your entry price, from your stop loss to where the liquidation price is, so that you don't get liquidated. There is a big buffer there. Sean, sorry, hi.
Hi. Thanks again for sorting out my Venmo subscription this week. I really appreciate it.
You're welcome, man. Sorry about the stuff up that I did in getting it.
That's all right. That's all right. When looking at that example you just showed of your trade, when you're setting that up, I just get confused about where does the stop loss fit in when you've got all these confirmations that need to get hit? And do you plan it initially, or does it just roll a 3% from the entry once the actual trade is taken? But then is that, by the time that happens, is that where a stop loss really isn't going to be making much sense anyway? Does any of that make sense?
Everything you just said there makes sense. Yes.
Yeah.
I'm going to repeat it again just in case to make sure I've got it right. Hey, you've got. I'll go to a different. Let's go to a different chart. Dashboard. You start charting. And so the examples we were doing here were with a horizontal line, but then the trade I showed as an example of how it works in action was actually an uptrend. And so I believe you're asking, hey, if it's an uptrend, how do you know where the bounce is going to happen, and where does that put your stop loss?
Yeah.
Yeah, cool. So let's go and look at Ethereum. And oh, look, it's an uptrend. Let's pretend that, there kind of is one. Anyway, I'll come here to my triggers and I'll go to triggers, add, and I will add an uptrend from there. That looks pretty good. My 2-second TA with Richard Morwood. Oh dear. Don't follow this trade. Let's go to setups and we'll go to add, and I am hashtag always bullish. There's a blog post about my always bullishness that got released the other day. Long bounce. I'll put my take profit up here, and I believe that we are going to be forming an ascending triangle in this space, and that this is a pretty strong resistance level. I don't expect us to break this resistance just yet, though I look forward to be proven wrong. We're going to ignore all the entry conditions for now. We'll bring those in a second. So if I put my stop loss here, then that would give me a 3.7 to 1 trade. Yeah, not bad. But where's the bounce actually going to happen? Is price going to follow this line and touch here and then get me an entry to that exact spot? I got no idea. We just put this blue line arbitrarily says draw it 4 candles in the future and then draw it 4 candles in the future after that to give us a bounce. That's as much as it does. So price might actually bounce over here and then shoot up. Now, if that was to happen, our risk reward is going to go from a 3.7 if we get an entry over here to, at this point, our risk reward is going to absolutely get smashed and go down to a 1.08 to 1. I don't want to take that trade. That sucks. So first off, to protect yourself from that, Vema's risk management has a minimum risk to reward. So if that was to happen, Vema would in this case step in and say, man, your risk to reward sucks. It's less than your minimum. I'm not going to take the trade. But hey, you know what? You're pretty solid on this uptrend and you want to take the trade anyway. Where should the stop loss go? You know, just for the sake of this, you know you want your stop loss to be, what is that? Roughly 2% away from entry to stop loss. So you want your stop loss to be 2% on the other side of the trigger, no matter where the entry is. So under risk management, there's a stop loss strategy here. Fixed is the default. Just drag your value wherever you want it. The one I love, though, is the stop loss strategy other side of trend line. This one here now says, well, let's say price did enter at this point and our take profit was still up here. Our stop loss is going to be 2% away from the trend line. There we go. So roughly about there-ish. So now we've gone from that 1.08 with a dynamic stop loss that's going to trail the trigger with the entry. Now we've got a 2.23 to 1. We've got the exact same entry, the same take profit, but we've introduced a dynamic stop loss based on just put yourself X% on the other side of the trigger. Does that make sense, Sean?
Yeah, that makes sense in a flowing dynamic way, but that 2% could still fall nowhere near any actual market structure, couldn't it? Depending on
Yeah,
where.
correct. Absolutely.
Yeah,
In this
that's
case
yeah.
here, what am I aiming for? Man, there's an uptrend. It has bounced, it has bounced, it has bounced. It is all right. If I've gotten the trade, if price
Yeah,
goes
so you're just
2%
running.
down through there, that's gonna be my invalidation.
That's just the invalidation point anyway. Yeah.
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 So
Cool.
now bringing in the other conditions for this, just for the sake of this, so I get a better risk reward, I'm going to move my take profit up to 37,000. Purely for the sake of having a nicer risk reward for this example. Don't set your take profit into the future just to make a better risk reward. That's not a good idea.
Bad habits.
Yeah, bad habit. I'll get rid of this part and I'll get rid of this part. So now we've got this set up here, the regular, hey, we've got a distance to activate. Let's follow that. A distance to activate of 0. So price must touch the trigger, which it has done, that's how we got the uptrend. If I add a condition here of a distance to confirm of 1%, what's my stop loss going to be now? It's going to actually be 3%, because it's 2% from the other side of the trend line. And also our entry is now 1% above the trigger. So from the entry point of this blue line, our stop loss would now be 3% away. So 1% because we bounced off the trigger, and 2% because the stop loss should be 2% on the other side of the trigger. So effectively, that will have actually hurt our risk reward 3%-ish, and our take profit up there. Our original entry would have been on the trigger, which would have been a 6.45. But because we added that distance to confirm on an uptrend, now it's going to pop itself up here. So now our 6-to-1 trade has become a 3.6-to-1 trade. So yes,
with a little bit more confirmation.
Yeah, with more confirmation, absolutely. Yeah. So what do I again, this is pure personal speculation on things. I look at that and go, well, you know what? For that to have happened, if we look back over here, price must have hit the trigger, which it did. It wouldn't have taken the trade. It wouldn't. Oh, bam! Now price has moved 1% away from the trigger. I've got my entry. So that tells me I've got a confirmed bounce. And so what do I do when I do that one? Well, my stop loss percent now becomes 1%. I bring my stop loss closer. I've had the hit the trigger. I've got that confirmation. So that tells me that the uptrend is holding and buyers have stepped in. So I feel confident moving my stop loss closer, which then gives me a risk to reward of whooshka. Let's move that up there, and it comes slightly down where it was. So now I'm back to my 6-to-1 risk to reward. Sorry, that's a bit too close. I'm back to a 5.5-to-1 risk to reward.
Are you saying you trade off? So if you're doing a 1% distance to confirm, you'll have a stop. So you'll change your stop to, if you've seen this particular thing sort of pattern play out in this setup before previously, like it has.
Yep.
When you're doing distance confirm of 1%, you'll then offset the stop loss back up 1% closer to just to even it out at 2 again.
Yeah, correct.
Yeah.
That tells me, hey, buyers have stepped in, the uptrend is held. And because the uptrend is held and I've got that extra confirmation that the uptrend is there, I will have the system move my stop loss closer, still using the stop loss strategy of other side of trend line. So it's always going to be on the other side of the trend line, which is lovely.
Yeah.
But it's going to be closer to where my entry was, which gives me a better.
Is it on candle close if it penetrates that trend line, or is it just would a wick stop it out?
Well, in this case here, I don't have a candle close on the entry. And so, you're talking about, hey, I'm in the trade. Let's say I got in the trade and then price has now come up here, and then we had a massive wick jump down and come back up and closed up here. No, price wicked your stop loss, so you'd be out of the trade.
Okay.
For now, we have, I think the after strategy templates, one of the most requested features is a candle close stop loss, which I'm happy to talk about that pretty soon.
Cool.
Yeah, which is very cool. I would love to get your feedback on what I'm about to describe after I show some other stuff, if that's cool.
Yeah, absolutely.
Awesome. And that's how I get you to stay on the call. Mwahaha.
It's all good. It's all good.
It's genuinely, it's super cool, the CandleClose stop loss. All right, cool. So Jeff McEwen asked, what is the VEMA Smart Stop? So he's been looking here in the risk management section. We've been talking about other side of trend line, and he's noticed this super cool checkbox here. What does this one do? Oh, wow. So I'm going to come to my take profits. I'm going to add 2 more take profits onto this trade. There we go. There we go. And we'll move one up to 4,000 because why not? Don't ever do what I'm just doing right now. Why not is not an answer on to how to trade. Right, cool. So now I've got my trade happening. I'm in the position. All the entry conditions have been met. We're in the trade. We're doing great. Price is moving along. And price has then gone ahead and shot up and hit our first take profit. Fantastic. The VEMA Smart Stop says, hey, your first take profit was hit, get that stop loss and move it up to entry. And then when price goes ahead and hits the second take profit, that tells VEMA, second take profit hit, take that stop loss from the entry and move it up into profit on take profit 1. And then price goes ahead, hits take profit number 3 and exits, and you're a happy camper. But if price was to hit take profit number 2, B's dicks past take profit number 3 and comes back down and hits here, you've exited the rest of the position in a profitable place, as opposed to leaving it to fall down here and then losing a lot more of the trade. You'd be giving up a lot more of your profits. Jeff, that's what the VEMA Smart Stop is. And if you come up to so the settings icon in the top right-hand corner, my account, and then go to customization, you will find here enable VEMA Smart Stop by default. If you tick this, then that means it's always, whenever you set up a trade, it will always set up the VEMA Smart Stop for you. So instead of you having to go and add 3 take profits and then go, don't forget to enable the Smart Stop, it's always going to be configured as on for you, which is just another little handy thing.
That's incredible, man. I like it. Thank you.
You're welcome. You're welcome. All right. So now the thing that we're working on at the moment, this is going to be coming out in the next, I'm hoping, 2 weeks. This is a preview of what Mike's working on at the moment. I'll skip through the video so we can see it. Hey, what's different about this screen now? We've got the setup, we've got the paper or live condition, then we've got the choose the trigger, and then there's a strategy template. Wow, what does that thing do? And then there's the long and the strategy and all the other stuff. So if we press play here and we just let this one play through, Mike's going to call this one, I think, break and retest with a break and retest. Probably shouldn't point out that he made a typo. Anyway, so he'll then go ahead and configure a trade by setting up a short and a break and retest and adding in the entry conditions for that, moving his take profit and stop loss around. You'll see here that he has changes minimum risk to reward, changes account risk percent, move the stop loss strategy, set multiple take profits. Like, whenever I do a bounce strategy, I know what my entry conditions are going to be. I'm going to use the activate, the condition, the confirmation. I'm going to use an expiry date. I'm going to use 3 take profits. I'm going to use an invalidation. Like, I'm always going to use those. And I get sick of having to click 50 times to make the thing happen when I know exactly what I'm going to do. So with this, check out what he can do now. He's got the strategy template. He can go add, choose the strategy template of break and retest, and VEMA goes, oh, you mean everything? All right, cool. I'll add the percentages that you like. I'll move your stop loss where you are the X percent away, and I'll set the stop loss strategy, and I'll add all those take profits in there for you. So that way, this is an advanced feature. Once you have set up your trades and you know what's working for you, like you've gone to the analyze section and you know that this is the strategy that works for you, the one that makes you money consistently, cool. You can go to VEMA, tell it what that is, go to start charting, and then go, in my case, I go add, I go ascending triangle. I love ascending triangles. And it goes, Richard, there's all your default entry conditions that you use every time for an ascending triangle. Like, oh, so much faster, so much faster. Once you get used to this stuff, like,
That is cool.
you try to go back to trading on the exchange. I hate it, without using VEMA. And then you throw strategy templates in there. Oh, yeah. You're never going to want to leave. Sebastian says, thanks for answering your questions. No worries, mate. Thank you so much for joining us. Any questions you ever have at all, Sebastian, get in touch. You know, I'm going to help you any time of the day. enjoy dinner.
You're streamlining the streamline already, mate. That's
I
just like
know, I know.
refining and refining it. It's really cool.
It's a lot of fun, man. It's a lot of fun. So two
Hey,
things. Sorry, you go.
you got a big get watch list yet?
I don't. It's a good point. I actually don't use the watch list over in Vema at all.
I don't know.
No, everyone raves about how much they use watch list. I don't. I just use this and look at what symbol I want.
Yeah.
It's one of those things. Maybe I should just start doing that. We Now that we have BitGet in there, I've got a work item that I need to do this weekend that says when a new customer signs up, add some default symbols for BitGet for them in their watch list. That'll be fun. Okay, cool. So two other things I wanted to show you is if anyone has any questions, then please put them in the chat or unmute yourself and say hi and ask away. I'm just going to talk about something that I think Sean will enjoy, which will be coming in about a month or so, hopefully. And then we'll talk about the candle close stop loss. So the first one I want to talk about is, hey, add the trigger. Whoopsie doozy. Ah, no, what have I done? Stop, don't freak out, cancel. Get rid of that trigger. Add the trigger. Let's come here and let's pull that uptrend there. And we'll go to setups, long bounce. And our stop loss, hang on, didn't we just have an act distance to confirm of like 1%? And then we had a stop loss strategy of an other side of trend line, always be 1% on the other side of the trend line. So this part here, the way this stop loss works is it says at the time of entry, move the stop loss 1% on the other side of the trigger. It doesn't follow the trend up. And that's what we want to change. So that will effectively mean if your entry happens at this point, then we will effectively be following the trend with the stop loss. So the stop loss will automatically follow up and always be 1% on the other side of the trigger as price goes on. This way, when you might have a take profit up here, but you know what, price comes up and up and up and it doesn't quite hit it and then it falls through and breaks the trend, you get stopped out there. So it didn't then go, oh no, you lost the trend, you lost all your money, bugger. It'll say, hey, we'll take you out of the action at that point. Which is pretty cool. Combining that one with multiple take profits along the way, you can just set a final take profit of way off in the distance. And that way you can have this just continuously riding the trend until the trend breaks and then it'll hit your stop loss and get you out in profit. I think that one's pretty cool.
Absolutely.
So that is one we've got coming up soon. The next one after the Jared, thanks, Richard. You're gonna have to play with. Yes, Jared, you're gonna go have a play with Vema now. Fantastic. You've been waiting for BitGet partnership. Awesome. Yeah, they're in action. They're integrated. You can start trading on them right now. If you have any troubles at all, get in touch. And if you want to connect up your API, go to our support page and search for BitGet. There's a video that runs through exactly.
There's already one done. Excellent.
Or yep. Oh yeah, we would not put the pairing out there without that, man. No way. Bam. If you need any help at all, Jared, then get in touch. Love to help you. Oh, also, if you're not already a customer, go to vematrader.com/happy birthday. Should have led with this one, Richard. It is Vema Trader's second birthday, and so we do have a birthday sale going on at the moment. Woohoo! Go ahead and get $200 off a yearly subscription or $20 off your first month or paper trading for $2. Already signed up. Awesome to hear, man. Awesome to hear. Everyone else,
or you can check out the post that I just shared in Crypto Calls Australia.
Oh, I want to check that out right now. I am not going to open up Facebook on a Zoom because there's one time there was some weird stuff. All right, let's clean off this chart, remove everything, and let's add this. This call is going so different than I thought it would tonight, by the way. So this is more fun. Here we go. Let's add this long and cross, long and bounce. We'll keep it on bounce tonight. Say we had the take profit up here and your stop loss was down here. I'm putting the stop loss here specifically because of this part and it wicked down here. So, there is a case of it wicking this far down. This is an advanced one. So if you're not fully across what 1% account risk means and position sizing and stuff, and you're watching this video, hey, Vema does really quickly, Vema does its position sizing so that if your stop loss gets hit, then we will be risking 1% of your account. We change the position size and magically make math happen so that you always lose 1% of your account if your stop loss gets hit. With that said, with a candle close stop loss, Sean, this is what I really want your feedback on for this part here. This is how we're imagining a candle close stop loss would work. Because this would be 1% of your account, if we were to wait for a candle close to happen, say down here, like price just tanks and falls down, you're going to lose 4 to 5% of your account. Like, where did it close? Who knows? The market just dumps and you're waiting for a close. You're just going to be pissed off that Vema lost you so much money. It wasn't us, it was your strategy, but hey, I get it. Blame the software. I totally get that. What we want to do instead though, is say, all right, well, you know what? Let's say that the candle close was actually, this stop loss here was 3% of your account. So if price was to fall past your trigger and hit your stop loss, that would be 3%. But it would then say if it closed anywhere in this area, then we'll cancel the trade for you. We'll just close the trade. Hey, there's your 1%. You know what? The candle closed just below 1%. We'll close the trade there. But that way, if it wicks down and comes straight back up and it didn't actually hit the 3% stop loss, you would not be taken out of the trade because the candle did not close in this get me out zone. So that way you could lose a range from 1 to 3%, depending on where the actual exit happens, but it would enable you to be wicked down and still in a trade. Like it would potentially, if we had that a little lower, you'd still be in this trade. If you got in here, if you got in over here and then price wicked down, you'd still be in the trade because the candle didn't close inside that zone. I need to get better at explaining that one.
Yeah, no,
But Sean, how does that sound for your stop loss?
Yeah, it's interesting. Yeah, I've got to think about it. I think as a beginner, you just don't want to be. So I guess if you don't want to be using 3% risk.
Yeah, exactly. But if
you're really like, not
you
unless you're like a refined intermediate, maybe trader, yeah. I mean, how many times does this regularly happen?
Yeah, exactly. So it doesn't, if you look back, it doesn't actually happen that long. If there's a wick from a massive sell-off, it tends to go down and come straight back up like it did right here in this spot here. Has it happened since then? No. If you go back here and find where was a spot that you could have taken along that it wicked straight down and then wicked straight back up, and it did it multiple times.
Yeah.
Unless you're talking right here, it doesn't really happen.
It might be a certain coin strategy. Some coins just wick a lot in certain,
Yeah.
But it's a very interesting way to look at it and a way to
get rid of all that.
Work around it.
So that's what we're thinking there. And so, hey, you could set that. I don't want it to be 3. I want it to be 5%. And if it came down here, so we'd let you control, like we have to have a stop loss. Vema will not allow you to take a trade without a stop loss. That's not something that we're ever going to do. Because that would mean there's no order on the exchange. And if Vema was to go down, then, oh crap, that would just suck. Like there are legitimately times, like the other night, OKX, when Bitcoin had such big price movements, such big volume the other night, Vema could not speak to OKX. The OKX server said, hey, sorry, we're too busy, try again later. And it did that for about 20 minutes. So that's 20 minutes there where Vema would not have been able to say, oh crap, we should be exiting this trade right now. And we can't because the exchange isn't accepting calls right now. Does
that happen often?
That does not happen often. No, that has not happened in probably the last 2 years since FTX collapsed. So
is it purely just an amount of people on the servers, like because of what Bitcoin's doing?
Yep, absolutely. It's because of what Bitcoin's doing. There's that many orders being processed that sometimes the exchanges, they just, like, for infrastructure reasons behind the scenes, I can get into that if you want, they just say, crap, we can't handle this load at this point. We're not ready for that. It tends to only last for like a couple of minutes because what happens is one server gets overloaded and then it goes, crap, spin up more servers to handle the load. But that takes a couple of minutes to spin up all the extra compute capacity. Anyway, so short version of that, Vema is always going to have a stop loss there. Not going to have to. That's also what we do use as our position sizing. We must have it there. But how far you could go for the candle close and what percentage you were willing to risk for that candle, for that immediate stop out, that'll be up to you to configure. If you could think of another way of this or have feedback on that, give it a think about.
I think it's definitely got its use case. It's definitely got its use case.
Yeah.
Yeah. You just need to test it out a lot.
Yeah, exactly.
Yeah.
So this will be one that we put into, when we build it, we'll put it into a select group of people before we push it out to everybody first. We'll say, hey, people, we want to try this one. Who wants it? Oh, good. Sean, you volunteered along with 5 other people. Let's get you all onto a Zoom together, show you how it works. And then you go away and play with it for a week or two. And then come back with feedback at any point to say, oh, yeah, cool, that worked, but I didn't like this part here. Maybe it will work different if blah happened. Then we'd adjust and tweak as needed.
Cool. Always progressing. I like it.
Always trying to come up with new ways of doing things. Absolutely.
Yeah.
Absolutely. La, 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 la. Where's the other one I wanted to show you? This is pure me showing something for the fun of it. We have no plans to continue developing this feature that I'm about to show you yet.
So why show me? What are you going to tease me with?
Because I just like talking
cool?
about the future, man.
Cool?
You just then said, hey, you're always trying to innovate and come up with new ways of doing things. Yeah, we are. We are. Oh, man.
So why is it on the back burner then? You got too many other things?
We got so many other things we have to do. Absolutely.
Yeah, cool.
It's a resources issue. Hey, if you want to invest in the company and help us expand, let's talk.
Give me a couple of years.
So we're big fans of ASX Trader.
Aren't we all?
Aren't we all? Absolutely. So he's a big fan of fibs and Reese is a big fan of fibs. But let's pretend that price was just up to this point, was only up to this candle here. If you had to draw fibs, you would draw fibs at this level and you'd go, oh yeah, cool, now I'm going to go to bed. So you would have set up your bounce trigger at, let's say, the 38% mark. Yeah. But then price decides that it's going to continue going on to the future. It never retraced and now it came up to here. And so, you got to cancel your trade. You've got to come and move the trigger and put it up there to the 38.2 mark. Like, you've got to do that yourself. What if there was a thing that you put fibs, you picked the bottom point and it just tracked the highest price that it ever saw? Oh, cool. Today it's up to there. And it just moved fibs as price went higher and automatically moved your trigger up to whatever level you wanted. We can come here and go long and go auto fibs. And then you could say, hey, I want to have a bounce strategy always set at the 38.2 fibs level, please, with the distance to activate of blah, distance to confirm of blah, distance to invalidate there. Yeah, that one's really fun, man.
That's interesting.
That one. So there's issues with that. Like, hey, what if price was to come to, let me find a point where there is not a fibs level.
Is there like some sort of a invalidation point of like how many candles before it's sort of moved into a consolidation as opposed to still part of the one move?
That would be what your
what I mean?
add condition, long, whatever, your expiry date would be for. Hey, hang on.
Yeah, okay.
This hasn't happened by this date here, so we should just terminate that.
Yeah, cool. It's interesting.
Oh, that one's fun. That one needs front-end work. Anyway, yeah, I'm talking about other things in the future, but
yeah, that's interesting.
All right, so that's really that's really all I've got. That's a lot of stuff we just covered, by the way.
Cool,
that is all for tonight. What I was going to do was actually go through the simulator and pick on some trades, and then we could do some trades together. So we need to make more use of the simulator here. This one's cool. So this is the simulator. I'm just talking out my ass now because I'm excited about it.
Is this what Reese was playing on at the Rise Up thing?
Yes, absolutely. Yep. Absolutely. So we've got a trade simulator where we can say, hey, What if this is all you could see on the price, what would you go ahead and what strategy would you do and how would you actually trade this scenario?
Yeah,
So I
but
can say, oh,
these are all pre-built scenarios that you've rewound to, and it's sort
correct.
of a
They're all
pre-made thing, pre-made setup.
yes, it is
Yeah,
the
yeah, cool.
actual price of
Yeah, yeah,
the asset we're looking at here.
yeah,
Yeah, it's not randomized data. It is absolutely real data. It's just we don't want you to see what symbol it is so that you go, oh yeah, on this date at
yeah,
on that
yeah. And if
symbol
you
we can
know,
cheat.
yeah, no, it's
Yeah,
cool.
so we can then go long and go, let's go for a cross strategy. I'll put my stop loss here and I'll put my take profit up to there. Oh, look at the price. It's clearly Bitcoin. It's going to go freaking skyrocket. And then simulate, and then we leave that. So I was going to do that tonight and talk about, hey, how can we use the cross strategy in more action? And look at that, it just blitzed its way through. Yay. But hey, we had lots of questions from people tonight, which was fantastic. And that's always more fun. And it's helping people actually understand what the system's doing. Yeah, we'll refresh this
Steve's
one.
got a good question.
Richard, can we renew at the birthday price? If so, how do we arrange this? Yeah, Steve. So if you were an existing customer and you don't have a subscription going currently and you want to get the birthday price, email me richard@VemaTrader or support@VemaTrader, and I'll be very happy to help you out. I'll put my email in the chat. There we go. I'll just need to know what your email address is, or your username, which pricing tier you wanted to go to. Was it the paper, the yearly, or the monthly? And I'll take care of the rest for you. Absolutely. So much fun things. There aren't enough hours in the day. That's the way I view this, man. My fleshy body needs sleep. I don't want to sleep. I want to keep working on this. It's so much fun.
Don't burn out.
Don't burn
Look
out.
after yourself.
I don't burn out. This is way too much fun.
Good.
That's why I do exercise.
Yeah, I'm on to it's the end of week 7 of the 8-week Couch to 5K. So I just ran today. I
Oh, really?
ran 4.79 Ks non-stop, which is good. So
Yeah, wow,
at
dude.
the end of 8 weeks, you can run 5Ks. At the start, you start from 0, like you run 60 seconds, you walk 90 seconds, run 60 seconds, and it just builds you up over 8 weeks. So you hopefully go injury free.
Is
And it's been good.
that sounds really awesome. Is there like a
It
run
is.
every day or does it have like a
No,
rest?
it's 3 times a week. 3 days a
Times
week.
a week.
Yeah.
Where do you do this one through?
It's just a free app.
Okay, that sounds pretty cool.
Yeah, yeah. It's good. This is the second time I've done it. Because the last time I did it, I went through the whole program, then probably ran 5Ks 3 times a week for maybe 3 weeks, and then did a race, and then got white line fever in the race, and just ran way faster than I'd ever run. And I got 5 minutes quicker than my actual time, and I
Yeah.
tore my Achilles
Oh, no.
because I was all uphill on the second half of the race. And then I literally had like 9 months out, 9 months of no running. It was
Yeah,
just,
damn.
yeah. So I've spent the last 3 months doing like calf raises to a metronome and a whole bunch of different things my osteo told me. And then it was only in this just before Rise Up, Monica opened up like a undeniable challenge.
Yeah.
And I saw Pesh talking about jogging and running and stuff. And then I'm like, oh yeah, I remember when I was running and all this. And then I reread the post. I'm like, this is bullshit. Stop living in fear of running again. So I just started running that day. I'm like, all right, I'm doing it again. So
Nice.
it's been good. I'm at the end of the 8 weeks now. Like week 8 is next week, and I feel good. My body's good. I'm going to my osteo every couple of weeks, and I'm working on things, and yeah, things are good.
That's cool, man. That's really, really
Things are
awesome.
really good.
That's super here.
Yeah, everyone at work saying, "Have you lost weight?" Because I've added protein shakes in the morning
Yeah.
to sustain my energy through the day, and I'm eating half-size dinners. So I must be losing weight because I'm just not going to bed bloated or. Yeah, I'm feeling good. I'm feeling really, really good.
That's awesome, dude. That's really, really awesome to hear. Yeah, good work, dude. Good work. So after you can do 5K, what's next from there?
Just keep probably do five a day, 3 days a week for a few weeks, and then start to progress to the 10K version.
Oh, okay. Start going to the big boys.
Because I want to run I think I just saw one tonight, a 10K around Albert Park on the 19th of May.
Yeah.
It's like a run for MS or something. But yeah.
Cool. So there's your next target then, eh?
Yeah, that's the next target. So that's about 8 weeks. What is it, 19th of May?
That's cool, man.
We're
That's
at March, April, May. Yeah. Yeah, it's definitely doable. And it's definitely doable safely and non-injury. Because they say once you get to about 5Ks, you just add 10% every week. And that's a healthy incline or a healthy trend line of running without injuring yourself. So next week I can run 5.5. Next week I can run 6.1. The next week you run 6.7. And it's a healthy way of going up in distance.
Yeah,
So
cool.
definitely
Cool.
go from
You don't just go
5K.
from like 5 to 6 to 7 to 10.
No,
Like,
yeah. But then once you get to 10, then it's 11, 12,
Yeah.
1, 13, 2. It's like it just inclines really. Yeah, it's easy. Just an extra 5 minutes really. But
the 10% compounding itself a lot more.
yeah, basically.
By the
And
way,
then I'm looking at like heart rate charts. Isn't it funny when you look at heart rate charts, cadence charts, elevation charts? It's like they're just charts. Like and you just see it's like, oh look, this is where I broke trend line and I started to change the overall trend. It's when you know what I mean? It's interesting how trading just gets you looking at these things in a weird way.
At the last company planning session for the team, I brought up our customer numbers since launch to that day. And I go, and now if we do TA, we can see the trend line, we can see the fibs level, we can see resistance.
Yeah, you can see this is where we went to an event and this is where we broke out of resistance. This is where we had an onboard of customers and now we're heading to the moon.
Oh yeah. We are currently at all-time high of customers, and I don't want to have to get a retest back to prior high. Just wanted to just go parabolic up. Fun stuff. All right, everyone. We've been going for an hour here. I hope you've enjoyed the call. I hope you've gotten something out of this one. If I don't shut up, I won't shut up about the product because there's just so much cool stuff that we've got coming, but I am aware that I should probably contain myself. So in this case, I am going to stop sharing at this point, and I'll wrap up the call. Thank you so much, everybody, for coming. If there's ever anything myself or the team can do to help out, please just get in touch. Richard at Vema Trader, support at Vema Trader, or on any social media platform, send us a message and we'd love to help you out. Have yourselves a lovely weekend. Thank you very much, everybody. Bye-bye.
Thanks, Richard. Thanks.